The entire FTX saga is a gift that keeps on giving. Seriously, the more we find out about it, the more we realize what a massive mess it all was. In today's video, we're going to talk about how the FTX disaster has set back the crypto industry by years and how it's going to finally reshape the industry. So make sure to stay until the end of the video to learn all about it. First up, the investor confidence has been shattered. See folks, that's the thing about the world we live in. Stock prices of companies often nosedive because of rumors or things that have nothing to do with the company's performance. Take the crash that happened during COVID-19, for example. While businesses were doing well at that moment, everyone knew that the uncertainty in the coming days could harm them. Hence, folks rushed to get their money out, creating excess supply, and well, everything just went downhill. We bring this up because something similar is starting to happen. When FTX collapsed, it shattered investor confidence, and folks are generally just being super careful with crypto. They're also trying to liquidate their funds, while potential investors are holding back till there's some certainty. This in turn is lowering the demand and increasing the supply of crypto, thus the current slump. Because FTX's collapse is no joke. It was a freaking $32 billion crypto exchange. $32 billion, folks. That's a whole lot of money that they lost. Market players are now trying to figure out how much damage that whole thing has caused, and well, it could reshape the industry for years. Because here's the thing, from what we know, FTX connected buyers and sellers of crypto. That's all, right? Nope. It dipped into client money and made risky trades through its sister company, Alameda Research. No one puts it better than Luis Abbott, a law firm partner specializing in crypto asset recovery and fraud. It's hugely disappointing for investors. There are three ways this event may change the industry. Let's dive right in. First and foremost, regulation. Of course, this whole thing happening now means that regulators are going to be a lot more careful and they're going to be a lot more vigilant. While efforts have been made to regulate the industry, it's still quite unregulated. Investors just don't have the same protections they would if they gave their money to a bank or a broker. This is probably the first thing that's going to change. Because here's the thing, the three market leaders, the United States, the EU, and the UK, are already taking steps to clean up this mess. Because right now, no one's really looking out for the investors, and they're super susceptible to fraud. As of right now, the only comprehensive framework that we have is the European Union. It tries to reduce risks for consumers, and it makes the exchanges liable if they lose assets, just as it is with banks. But this act, known as MiCA, isn't going to be put in place until a year from now. But time is of the essence here, because in 1 year, there's going to be a lot of unregulated cryptos traded all over the world, and this would actually help the industry out. As Abbott put it, people need to see that we are working to regulate it, and I think if we can offer some regulation, we build confidence. If there's no regulation, the investors are left without that protection that they need. Once investors are feeling safe and secure, they can start investing in this market again, and well, that's only going to drive it up, not drive it down. So yeah, regulation will actually help the market. Following up on regulation, so this whole fiasco has set back the industry by at least a couple of years. And let's not forget, FTX isn't the only thing that failed this year. We've got Celsius, and we've got Three Arrows as well. And all these were neither centralized properly, nor were they decentralized. That's the thing, right? You can't have it both ways. You can't have no oversight, yet have complete centralization. That's just not how it works. It's a recipe for disaster. And don't just take our words for it. Ask the folks who lost their money with FTX. So when these crypto exchanges have centralization, they're going to want to do it with proper oversight. And only law enforcement can make sure that this happens in every single case. Otherwise, we're just waiting for another FTX to happen. Next up, consolidation. This is the other way this whole fiasco will change the industry. Many new companies emerged after the 2018 crypto winter, and FTX was among them. Now we feel that we won't see as many companies. There are going to be fewer companies and fewer coins. Because here's the thing, we can say this with confidence because the domino effect from FTX has already started. BlockFi, another crypto lender, has been declared bankrupt. Now folks are turning their attention to Gemini and Genesis. And this is bad. Really, really bad. Because what's the impact? The impact is that folks will just not have money anymore. Because here's the thing, fears are starting to rise. Now that everyone's losing money, folks are just super sus of other exchanges as well. Since early 2020, 900,000 bitcoins have flowed out of exchanges. That number is not going to grow as fast as we expected it to initially. Binance is in trouble too. If you have money in Binance, don't worry, nothing's happening to it for now, but it is facing questions about its reserves to backstop customer funds because investors withdrew billions of dollars of their funds from the company. And well, this is how the whole FTX thing collapsed. Like, yeah, as of right now, there isn't any reason to think that they might go bankrupt. It's not like that. But the situation ain't perfect either, because trading volumes are falling and more money's flowing out than is flowing in. That's never ever good for business. Oh, and Coinbase is going through the same thing as Binance. Now, for a bit more on consolidation. Folks still believe that these companies will continue to be important. They will still play a role, but their survival will, of course, be based on how good they are. And not good in the sense that we expect them to be geniuses who steer us out of this chaos, but rather if they take risk management, governance, and regulation seriously. Yeah, the bar's pretty low for crypto firms, isn't it? The exchanges that are doing things the right way will survive, and the ones not doing that will fail or get eaten up by larger exchanges. They will clean up the market, consolidate it, and most probably make it a bit safer. For example, everyone is expecting Bitcoin to survive, but these smaller tokens, yeah, they might not make it. Up next, innovation. So this is the third and final way we expect the whole FTX fiasco to change the industry forever. Despite everything that's happening right now, we truly feel that this industry is going to make it out of the ashes. And then, let's not forget that this whole mess might mean that we start using the blockchain in other ways as well, rather than just speculative uses. Because the truth is, digital assets are here to stay. They're an important part of our lives now, and their importance is only going to grow. So the use of the blockchain will only increase, and it will only get more innovative. At the same time, we might see innovation in coins, assets, and exchanges, something that could make them more reliable and trustworthy. Because considering everything that's going on right now, trust is at an all-time low. Let's talk about what this collapse means for crypto exchanges. So, the crypto industry has been hit, massively hit. Even big-name investors such as SoftBank and Sequoia Capital dumped so much money into FTX. And well, all those bets are now pretty much worthless, aren't they? And like, okay, these are massive companies, they'll survive, hopefully. But what about the countless folks like us who lost so much money because of this mess? Regulators are still investigating allegations that FTX and its sister company misused the money. Many everyday folks lost all of their life savings as well. This problem has gotten so darn serious that it's questioning the financial health of other companies as well, such as Crypto.com and Binance. Binance has done a lot of marketing, but if you watch the World Cup, you can see that Crypto.com was everywhere. How do they even have the money to keep sponsoring, considering how downhill the market is right now? And as we've already mentioned, the dominoes have fallen. Remember how we mentioned that BlockFi declared bankruptcy? Yeah, that happened because they had revealed lending exposure to the now disgraced crypto exchange. According to Marique Flamand, the CEO of the Near Foundation, this is going to have a huge contagion effect, as a lot of projects are not going to have funds that are going to help them develop. What's more, even Bitcoin deposits are down. Yeah, as expected, people have removed their money from these exchanges. After all, they may want to protect themselves from the fallout. Back in 2020, 3.3 million Bitcoins were deposited. Now that number is 2.2 million. That's 1.1 million fewer Bitcoins. Because here's the thing, right? Even though FTX was worth $32 billion, nothing's too big to fail. Don't just take our word for it. Ian Rogers, the chief experience officer at Ledger, said so as well. Now, the question is, should we abandon exchanges, or should we still trust these centralized companies? Let us know down below. Finishing up, is Binance next? No, it's not. The company's CEO, Changpeng Zhao, has stated that everything is fine, and it's just business as usual. The company also offered reassurances that all the withdrawals were managed with ease. At the same time, neither did we find any evidence that would suggest things aren't going too well at the crypto exchange. That's a wrap for this video. Do you guys think this will eventually make the crypto industry better, or has this started an unstoppable downfall? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.